Good morning, good morning, good morning. It's Wednesday, the 23rd of October. Apologies for the echoey sound. I'm in a rather vast living room. Where is Mr. Brown? Come on, Mr. Brown. There's Tom, there's Chris. Come on, Mr. Brown. He's probably having a flap somewhere. Do I know any sensible jokes that I can pass the time with? None that I can repeat. I tell you what I can do. I can do. Oh, there he is. Oh, just as I was about to do the legals. Co-host invite sent. Dun, 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 dun. Come on, Mr. Brown.
If you don't tag me in the name of the space, I don't get a notification that I'm here and meant to be joining.
Oh, okay.
This
Well, this.
PIQ's space does not
Oh,
tell me much.
I
I have to
might have
go
messed it up
hunting
when
around on the internet.
I might have messed up when I set it up then. Apologies for that. Let me just quickly do the legals. Nothing discussed on this basic session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ, or PIQ Suite, or its affiliates, including the hosts, which is Pun Master General, Mr. M. Brown, and myself, Mr. Ryan Paisley. How the devil are you?
I'm very well, actually, mate. I'm very well. How are you?
I'm very well, thank you. Very well. Got a very exciting day. I can't say too much, but very exciting day lined up.
Oh, I was going to say, you do sound quite sprightly this morning.
Well, yeah, I'm just overlooking the park. Well, say the park, the square in Islington, living my best life.
Oh, God, you're a bit close to me this morning, then.
Well, exactly.
That's
Not close
worrying.
enough. Whee. Right. Anyway,
Oh,
quick, move on,
oh,
move on, move on. What
oh,
happened?
dear. Have you done your disclaimer?
I have, mate. Yes.
Oh, right, fine, good. In that case, good morning all. Let's crack on. It was a choppy but ultimately directionless day for the equity market yesterday, with the S&P 500 ending the day flat and the Nasdaq eking out a very, very modest gain of 0.1%. Although that does mask what was actually a decent bout of intraday volatility. We saw the S&P down about 0.5%, the Nasdaq down almost 1% on an intraday basis before dip buyers stepped in once again. And that move in the equity space was really mirrored in the fixed income arena as well. We saw some early selling pressure, which took 10-year yields north of 4.2% and 30-year yields north of 4.5%. Although we did then see demand creep in as equities leaked lower during the day, and then we've seen sellers regain control of the Treasury complex overnight. Although we did see yields across the curve settle yesterday pretty much unchanged from where they started. In the foreign exchange space, it was notable to see the dollar continuing to gain pretty broadly, with the dollar index advancing further north of the 104 figure and trading to its best level since late July in early trade this morning. As a result of those dollar gains, the euro surrendered the 108 figure for the first time since early August. Cable dipped back under 130, and dollar yen rose north of 151 yesterday and overnight has traded north of the 152 figure, also for the first time since July. In terms of the commodity space, gold, the day ended at a Y, so the yellow metal rose to a new all-time high, just shy of $2,750 an ounce. And we also saw some upside in crude, actually the first back-to-back gains for WTI since the 7th of October, with WTI up by 2.2% to $72 a barrel. Despite all of those market moves, it was a day that was relatively light in terms of impactful catalysts, although there was plenty of news out there. We did have the great and the good of the central banking world on the wires once again. I'm really not going to go through all of the comments because there are far too many of them, and the majority of them are complete and utter nonsense, to be completely honest with you, with
I
most.
did what. I'm glad you said nonsense. I wonder where you were going with that for a split
No,
second.
no, no, don't worry, don't worry. Most of these central bank speakers just sticking to the very well-rehearsed script around data dependency and waiting for more information before deciding their next
As
move.
they should. As they should.
Exactly. That is exactly what ECB President Lagarde was saying, that disinflation is on the right track, but we can't say that inflation has been defeated just yet. Bank of England Governor Bailey, on the other hand, took the alternative option where he just didn't comment on monetary policy policy whatsoever. His remarks were very much one for the purists out there. He was talking about new surveillance mechanisms being needed for non-bank financial providers. So if that floats your boat, go
So
for it. If
was
you're a
this?
normal person, then it
I
probably
know
won't.
I'm certainly not a purist in this, but just quickly on what he was saying yesterday, was this a nod at um was this a nod at the likes of Revolut and kind of like these new kind of like hip banks that are kind of financial institutions that are popping up, or was this aimed at something entirely different? Do you think?
I've genuinely got no idea whatsoever because when I saw
Oh,
that headline pop up on Bloomberg, I went, fuck reading
because
that
obviously
speech.
it is. I think it is something that it will be increasingly important. Is the rise of these kind of like TikTok banks, as I refer to them as, but obviously they're not quite TikTok banks. But you know what I mean, like the Revoluts and the Tides and all stuff like that. Like kind of,
Of,
they're not fully the same regulated in sense of like your high street banks, but they are providing significant, well, increasingly providing significant services to smart startups and such. So something to watch, maybe. I don't
of,
know.
um, of all our listeners, Zach Eisman is the one who's going to know whether what the hell this is about, and he hasn't messaged me to rescue me yet. So I'm going to assume from
You
that
mean
that
the
it
great?
wasn't particularly
You mean
important.
the great Zach Eisman?
Yes, whose email hasn't arrived yet.
Well, I still haven't. I haven't. Because I have to link our blast to the
Oh,
email,
I
so
see.
it's never going to come out before the blast.
Oh, right.
I
Okay.
might be bringing him
Okay.
along on Friday though. Anyway, we've digressed massively here. Go on,
We
carry on.
have really right. Anyway, back to sorry.
Go
Zach
on.
has now sent me a message, and went sorry, wasn't listening to you.
Well, to be
I
honest,
mean, at least
there's
he's
large
honest.
tracks of this where I'm not listening to, so I forgive Zach for this.
Well, if
Right,
anyone
what were
is
we
still
talking about?
listening out there, what I was going to talk about was the IMF because they
Ah,
released their latest economic outlook yesterday, which, let's be honest, is wrong most of the time. But nonetheless, they did trim their 2025 GDP growth estimate, and their forecasts do just provide another example of this ongoing US exceptionalism theme with an upgrade to US GDP growth and a downgrade to Eurozone and I think China growth forecasts as well. They also upgraded the UK economic outlook, but of course, doing that a week before the budget is completely and utterly pointless because we don't know exactly what those policies and their macroeconomic impacts will be. In terms of other bits and bobs, speaking of the budget, Treasury may finally have seen a little bit of sense because they are going to slash the overseas aid budget as an attempt to fill this 22 or 40 or 100 billion pound black hole, depending on what you read. The pre budget leaks continue. Obviously, budget day is a week today. Over in the United States, usage of the Fed's reverse repo facility that's fallen to its lowest level since 2021 at $238 billion.
nature is healing.
Um, Indeed, and it's something important to keep an eye on as, of course, the Fed continue with their quantitative tightening process. A lot of people will be looking at reverse repo usage as a gauge
This
of
on this.
liquidity within the system.
This be very clear. Conditions are still, to use a very technical term here, so sorry if it's a bit above someone's head, but loose as fuck. Um, the like conditions are extremely loosey goosey. So people getting all like their knickers twisted because like this, like, we're over tightening and stuff like that. We're over tightening compared to extremely loose conditions. It's just normalization, and as we said before, like normalization is not the same as contractions or things being bad. It's just getting back to normal. People need to have a break, have a Kit Kat. Other chocolates are available.
I was going to say they don't sponsor us yet, so you can't mention them. What
Give it a
else was I
week. Give it a
going
week.
to mention? Oh, on the election, there were a whole bunch of polls out yesterday. Of course, both Harris and Trump pretty much neck and neck in all the swing states. The New York Times were also reporting that Jamie Dimon, obviously JP Morgan CEO, apparently supports Harris in private, but doesn't want to make that support public amid fear of a potential blowback from doing so. Well, it is now public, so we'll see whether that arrives. The New York Times also reporting that Dimon would consider a role in the Harris
Of course he
administration,
would.
possibly as Treasury Secretary. So we'll see
Of
what
course he
happens
would.
there. And last but not least, a couple of chunky after hours movers in the US equity space yesterday. Starbucks saw some significant downside. Their year-on-year comparable sales were down about 7%, and they've scrapped their guidance for the next financial year, which is not a particularly great sign. Although if you serve, shit coffee, what do you expect? And the other one is McDonald's. They were down almost 10% after hours yesterday.
Come
Apparently,
on,
some of their quarter pounders have got E. coli in them,
come on,
which is
come on, come on.
well,
No, come
well,
on. We know everyone listening knows there's a pun coming about McDonald's. Come on, bring one
well.
out.
There actually wasn't going to be, because the next thing I was going to say is 10 people are in hospital and one bloke's died as a result of this. So I
Oh
didn't feel
God,
it was
Ryan, read the
particularly
room, bro.
appropriate for
Ryan, read the
puns.
room. Read the room,
But
Ryan. Read the
well,
room.
yeah, I'm not loving that. But oh well.
Oh, there it is. Your puns sustain me.
And that is
Oh,
pretty much your lot in terms of yesterday.
oh, what a way to finish. Right, thank you for that. So a few headlines as usual from our friends Andrew Hart, Zach, obviously King Zach, and News Corp. Um, Andrew in his daily note this morning notes about toppy sentiment with Bank of America reporting that their corporate sentiment indicator is tracking at a record level so far this earnings season. And you know what happens when sentiment tops out. Goldman Sachs did a note yesterday, I believe it came out yesterday, about possibly a lost decade incoming. Goldman Sachs forecasts subpar returns over the next decade of only 3%. That's the seventh percentile since 1930. Why, you ask? Well, market concentration is at the highest level in 100 years, and their analysis shows it is extremely difficult for any firm to maintain high levels of sales growth and profit margins over sustained periods of time. The same issue plague a highly concentrated index. Take that with the biggest pinch of salt, but there you go. It's up to you what you do with that information. I just provide it. In plunge protection news, who doesn't love a bit of plunge protection? The old PPT, plunge protection team. A China think tank suggests that 280 billion stock market stabilization fund is needed to boost confidence. Boost confidence means buy stocks. So there's
Sorry,
one to
can I
watch. Yeah, go on.
can I just add to that? What was the
Yeah,
number? 280 billion, or well, whatever the number was. Doesn't really
yeah.
matter.
Well,
If
it was
they
that. Yeah,
Well, there you go. If they were to bring out, say today, and go, here's a 280 billion fund to stabilize the stock market, what happens? First thing that happens is the market rallies 5% or so instantly. The second thing that happens is the market goes, okay, well, when's the next 280 billion coming? And is it coming
absolutely,
soon? Because otherwise, if it's
absolutely,
not, we're just going to sell into the rip.
absolutely. You know it, I know it, we all know it. Um, Elsewhere, we've got German Chancellor Scholz leads a high-level delegation to New Delhi this week, betting that greater access to the vast Indian market can reduce Germany's resilience on Beijing. This is very much in line with everything else we're saying, where Germany is looking for other options other than the big Chinese market. Price of options that protect against extended slumps in treasuries is soaring as traders brace for a bevy of decisive events in the weeks ahead that have led to potentially deepen the market's losses. That's by Bloomberg, apparently. Chinese exporters are increasingly looking to relocate outside of China, pushing up costs elsewhere in Asia amid the prospects of ramped Trump tariffs, something which could shave 0.4 to 0.7 percentage points even off the Chinese GDP. Quite an interesting one, I think. Obviously, we talk about a lot of European countries onshoring and all of that, trying to get out of China. China being very proactive. Do you know what? I think China get a bad press a lot of the time. I think I personally is one for you. I personally don't think they're anywhere near as much trouble as Western financial press will have you believe, but that's just me. Um, Another one, China is to begin to allow foreign firms, including Tesla, to operate data centers in key regions. So one for Tom Talks Cars. He does love a data center, the nerd. Um, One as well. This is more of a PSA, I guess, more of a request. So I've read some really disappointing news today, and it's hit me hard. Um, Heineken have posted sales below analyst
Oh,
expectations. It's because they're challenging and changing consumer trends. This hits me quite hard. Guys, I can only do so much. You need to help me out. You need to help me drink more to save our precious breweries. You know, publicans need, homes. Publicans need to be able to heat their homes. We need to go to the pubs. I request everyone goes to the pub, have a beer. There you go. That's me done.
Oh, right, that's you done, is it? Right.
Yeah.
Well, in terms of today, then, following Ryan's request, you'll be pleased to know that the data docket doesn't really get interesting until 2:45
Well,
this afternoon.
in
So
that case, go to the pub for a lunch.
exactly. And at 2:45, when you are back at your desk, things kick off with a policy decision from the Bank of Canada, where we expect a 50 basis point cut to 3.75%. Of course, the BOC have already let me start that again. Have already
Hey.
delivered three 25 basis point cuts this cycle and are now set to speed things up a little bit as data is a little bit mixed in Canada. Inflation is well back within the target range, and also after the Fed opened the door to larger moves at their September meeting. The market curve in Canada pricing around an 80% chance of a 50 basis point move today, and also pricing in an even chance of another 50 basis point move at the final decision of the year in December. So, of course, there is a decent potential for two-way moves in the loonie as we move through into that BOC decision later on. Incidentally, overnight implied vol in dollar CAD that trades at about 6%, which is the just over 6%, or it was when I checked last night, which was the highest pre-BOC level in a year since the October 2023 decision. So the market expecting a decent move there. Into the rest of the afternoon session, the data calendar is relatively light once more, at least in terms of things that are likely to have an impact. The latest Eurozone consumer confidence and US existing home sales data due at 3. Neither is likely to impact too significantly, nor is the release of the Fed's beige book of anecdotal economic evidence, which is due at 7. Speaking of the Fed, we hear from Barkin and Bowman later on today, as well as another packed docket of 6 ECB speakers, 2
Ugh,
speakers from the BOE, the RBNZ
ugh,
Governor Adrian Orr, and
ugh,
the Riksbank Deputy Governor
ugh.
Janssen as well. Of those remarks, ECB President Lagarde and BOE Governor Bailey may be the most interesting, although I am being a little bit tenuous with the definition of interesting, I feel there. We do have supply from the United States today. A 20-year bond auction, $13 billion worth at 6 o'clock this evening. And the earnings slate is a busy one once again today. Before the open, we hear from Boeing, AT&T, Coca-Cola. And then after the market close, we hear from IBM. And we also hear from Tesla, who become the first of the so-called Magnificent Seven stocks to report their Q3 results. And that is pretty much it from me this morning.
Well, thank you very much. And that's it then, isn't it?
Indeed, it
Uh,
is.
cool. Well, in that case, I will thank you. I'll thank my
Oh,
listeners,
actually,
our
sorry.
listeners.
One
Sorry, go on.
last thing.
Yeah,
Going back to what we talked about Andrew Bailey earlier on,
yeah.
Zach didn't listen to it either, so I'm assuming it wasn't important at all.
Oh, and me and Arno did a whole preview on it. Well, to be honest, it was only Bailey was only mentioned a small amount. But anyway, I think I might be doing a preview of the Bank of Canada um, decision with Arno, but I need to double check with him. But anyway, we will let you go, listeners. If you are trading today, as always, keep it tight. Please remember to factor in the fuckery. It's a good rule for life there. And we will see you tomorrow. Now for the awkward silence.
We will
See you
indeed.
later, mate. Bye
Cheers,
bye.
guys.
Do, 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 do.